It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday at 11 o'clock till noon. And today being October the 9th. It's fascinating that today, 5 years ago, we were seeing highs, all-time highs. And now we're within, the Dow is within, let's say 14,200, call it. 700 points, so that's what, so about 6%, 7% of the old high. And we're starting to see a lot of resistance. What I've been telling subscribers to my opening call, that's my daily service, the service that comes out starting at about, 6 o'clock, 6:15, 6:30. I start sending charts to the TFNN server. They can be picked up by subscribers. That always goes like this. Invariably, it is the Dow. Let me show you here. It's the Dow chart, the Dow daily, with commentary. And besides the commentary that you see notated on the chart, there's also commentary below it. Let me just see if I can pick it up right here. There it is. Let me slide it across here. And you'll see what I'm talking about. A very comprehensive report. If you're a fund manager, if you're managing money, it's really important that you get a perspective on all the parts, all the moving parts. And that's what I try to cover every single day. Near term, meaning intraday, I tell you what to look for. Today I said, what did I say here? Yeah, let's go to this one. Today I said in the overview section, this is called Overview and Market Today, I had said, sideways is as sideways does until either the Dow 13,690s or 13,420s is taken out. The chances are that this hesitancy is rotating through both the strongest and the weakest sectors, thus making a silent series of ripples as the strongest stocks are attempting, and I stress, attempting to make higher highs, whilst the weakest are getting weaker. So there's this big divergence, and the divergence says that even within sectors, what I'm seeing is that certain stocks are acting quite poorly, and others are trying to make new recovery highs or highs. But at the same time, what is really important about this is that it's getting harder and harder for the Dow to make higher highs. And at the same time, you've got a very strong divergence, and that divergence is very important. Why? Because you've got the Dow leading, 30 stocks is leading, then you got the S&P, then you got the NYSE, the 2,000 stocks, then you got the Qs, and then you got the IWM in that order. You haven't got them all going to new highs. You haven't got them all saying, we're in sync, and therefore, because we're in sync, you can very well have a market that can go much, much higher. What it's saying instead is we're out of sync. It's a rotational market, and selectivity, that is the number of stocks that are leading, are becoming fewer and fewer. Even when I go to my Dow Quartet, GE, IBM, M, and UTX, I don't know what I just did there. They're becoming fewer and fewer. I also show the Dow, if I can find it here, the Dow 120-minute chart. There it is. This is the E-minis. I show them every single day. I discuss either the 120. Sometimes I add the 10-minute, but I discuss it in terms of what we're looking at and why we're looking at it. What happened is we made a peak F in the ChapmanWave. Let me just go through this quite clearly. In the ChapmanWave, what is very important is you identify the most important lowest low, left side low bar. You always have to go back enough to make sure you actually got that left side low bar. And then what you do is you merely count each successively higher peak. When you get to a peak D, as you did right there in early October, you can expect a sharp pullback. Well, it went to D, but you can also push a little higher to an E, and even what I call a rogue wave F. And what happens in a rogue wave F is that the technicals are failing. If you were short at that particular time, you're probably in the right stance, but there's this one rogue wave where it says high tide at noon at 12:06. you're busy setting yourself up on this furthest rock out there, and you're going to read your book and just watch the tide going out. Got your sunglasses on, got your suntan lotion on, got your favorite book, got your sandwich, got your drink, and you're sitting there, and you put down the towel, and as you're putting down the towel to sit down, ka-splash! There's this one wave that just didn't see the sign that said high tide at noon, and at 12:06 it goes charging up to the highest level on the beach. And then as you wipe your glasses off to see what happened, you look and the tide's going down. That's exactly what you do in the rogue wave. It spiked, the S&P minis spiked to 1466 on the opening of the 7th, I believe it was. And that very bar closed lower and then continued down decisively as the technicals, the MACD and stochastic plummeted. And what happened is, I said today, I've outlined in pink, white, and gray. I'm trying to get used to all these different colors, where the resistance is, where the body of action is, and what happens if it breaks down. And what I said, that there could be a slide. It shows the cup upside breakout, then the slide toward the 200 EMA. That's that level of 1443. Key support in the 1443s. More important now is the pink resistance zone, as the gray support area beckons at some point in October as a trading range target. Well, let's just have a look and see what happened. Look what happened. You went in the E-mini, the 120-minute chart sliced right through 1443, and exactly what we were looking at, a test of the gray area is taking place, and now you're getting to a lot of support. The low right now, we went to 1438.50, but the whole area of 14, I put it at 1443 to 1435 to 33, 1433. That's going to be the very, very important if the slide continues into this afternoon or into tomorrow. So let's go through the numbers. The Dow right now is at 13,506, down 77. The S&P is down 10 at 1445. The comp index is down 43 at 3,068. Let's just go there. I want to show you something that's very important in my work, at least. In the Qs, there was a peak G, an unusual peak G, with a failure at 70.58 and a failure at 17.54, just 4 cents lower. But that just didn't make that leg D. So the alternative wave count of G, I did put in here a potential C1, C2 failure pattern. So what I do with my subscribers is I educate every single day. I've shown charts. In fact, the last few days, I've shown charts that we aren't even in, but they are really important to monitor. Something like, I'll get into those because let's go through the numbers. It's way important right now. I wanted to show that the Qs made the pattern that I call the dreaded H. This is what I love to teach in my courses. My CD introducing the ChapmanWave methodology shows that. When you come down quite sharply in price and then you make an arch formation that fails way below the previous high, the test of the left side low, in this case 67.85 on the 26th of September, becomes absolutely key. And we've spliced right through it. I mean, when I say sliced, I mean, not only that, it took out the previous left side low of 67.42 on the 4th of September. Stochastic MACD are very negative. Now what's important is you look at the weekly chart, and the weekly chart in the Q says we've made a cup, a ChapmanWave cup, and ladle breakout pattern. They went to D and then to E. That says if it pulls back, takes out the left side lip, the high was the doji high. Remember, very important to look at your candles. There's a doji high in the weekly from the 21st of September. Very important how it closes over the next two periods. And then the third one is the clue. The third one took out the 9-period moving average, broke under the high of 68.55 from the week of the 6th of April. And now what it's trying to do is trying to tackle the low bar of 66.50, which was made on the 17th of August, as the stochastic was much weaker, but still positive up until right this second in the weekly chart, but the stochastic has almost frozen at 82%. It hasn't broken yet. So this is going to be a very important couple of hours and maybe going into tomorrow morning. Now, this is what I wanted to bring up. The monthly chart has this rising wedge formation. And the high that was made at 6, I should type that in, 70.58. Is that the right color? 70.58. Yep. Last month went right into another technique that I used. You remember I have 30, maybe more different techniques in my huge Sears and Roebuck toolbox. And you've got to pull them out when you need them. You don't need them most of the time. But when you need them, if you need that plumb line right now, you want to have your plumb line already. If you want to have, if you're looking at different candle patterns, you want to have that ready. So what's happening is that the resistance in the long-term uptrend line all the way from July, August, September, November, December of 2002 has hit the red line, hasn't broken the green line yet. That says until the Qs can break above 71.50 to 72.30 and then close above that, that's going to be tremendous resistance. Be careful. So what goes with that? It's the weighting of Apple Computer, AAPL. Showed the chart the other day. Apple had made a peak E-top in the ChapmanWave at 705.07. Didn't I write that in? Anyway, and that pattern that we're looking at says that there's a 705.07. There we go. 705.07. It says that coming after a silent doji candle, that's very negative, because if there's a break below, in this particular case we're going to be looking at a break below 693, it says be careful, because that 9-period exponential moving average, which was fabulous support, now becomes resistance. That is way up in the 654 area. Not only that, in the cup and in the arch formation, when you've broken the left side, right side time price match in speed or in price, and there isn't a bounce back just to say goodbye to the friends back in that arch formation, that would be back in the 649 plus area, but instead you continue plummeting down, you have no choice but to look at the next major level of support, and that comes in the 605 to 600 area. Apple's right now at 627, down 11. Now, while I'm doing that, I'm going to bring up something else, because I saw today that there was a stock that once was a favorite of mine. We hardly ever had it in my opening call. I just kept missing it. But it was just a spectacular stock. I say was, as past tense. Why? It's called Edwards Life Sciences. Let's look at the monthly chart. The monthly chart made a series of peak G tops, a G and then a D in the ChapmanWave all the way through until it really broke out into the 33s. After the August 2008 high. And then it started a tremendous move that once again went to, where are we? Yeah, went to a high in March of 2011. But there's a technique that I teach. It's called the ChapmanWave Instant Restart. And that's it. And the reason why I got into this, I could never understand why stocks often went to, not often, fairly often went to a peak C with all the requisites of a major turnaround, and then went on to a D or an E and then collapsed. This is the exact example of it. I'll be back. Basil Chapman. Bonds are up 5:30 seconds, and gold is down 12. We'll talk about it.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, 877-927-6648. Love to get your questions here. Just call it in. And anyone in the den, you have a question, I'm right here. Now, this is my concern. Gold. And I spoke about this the other day. The 120, let's start off from the nearest time frame. I showed this chart to subscribers the other day, and I said that gold looks to me like it's somewhat toppy here. It doesn't say it has to smash to the downside, nothing yet that I can see. But it does say that the pink area that you can see here on Tiger TV, let me just check to see that it shows up as pink. That's going to be interesting. Is that the one? Yeah. So that's this top area. Let me just click on it so that I know that you're looking at the same thing I'm looking at. All right. So this particular area right here is where there's tremendous action and then tremendous resistance. Underneath here in this gray area, if one can see it, the gray area says, if that 200-period exponential moving average of around about 1767 is taken out, not only you remember the pattern that I was talking about, the ChapmanWave dreaded H, the lowercase h, just, folks, there are patterns that repeat over and over and over and over. When you get to identify them, when you understand them, it makes things so clear. So what happens is when gold ran from the high of 1798.10 right down to 1768.20 on the 8th of October. Then it ran and went peak A, peak B. It made the arch formation. It couldn't hold above the 9-period moving average. And today it plummets where? It goes straight underneath 1768.20. And the technicals are still weak in the 120. So that says resistance is now just to say goodbye to your little friends over there in the 770 area, maybe 1774 maximum. But the downside says there's no real support until you're getting to 1759 to 1755. So that says gold is probably making at least a near-term consolidation with upside very limited. Now the daily says, if I use the same technique, and I discussed this yesterday, and I showed this yellow oval pattern, it says this is very important because it could make an arch formation. Remember I said it could be very bullish or it could be bearish. I said, no, that's ridiculous. Anything could be bullish and bearish. So let's look at what would make it bullish. Bullish would be any close above 1798.10, the high of the 8th, because it would suggest that a strong leg C is taking place, and that still has to go to D, and that would immediately target the 1808 to 1812 area. But on the other hand, if you start to turn the 9-period moving average into resistance, and why did I say that? Because the MACD at the top here and the stochastic are turning around, and I got a sell signal that is on one particular index, not the whole thing, but a confirmation of a pullback on the unbalanced volume. It said, be very careful. Why? Because if there is a sharp close to the downside, and right now I'm showing minus 11, but the actual price I'm a little behind is really minus 1070. Okay, so I'm catching up there. It's going to show that the candle, almost a Roman candle, with a low of 1738, would become a target, and a high of 1768 becomes a target if the price starts to go into that candle. But more importantly, it is the opening of that 1762.70. So if the gold, December gold, trading at 1764 right now, down 1170, if it goes into the 1762.70 area, in other words, underneath it, there's a real good chance that this candle is going to be filled. Now, that makes this even more important because all of a sudden, let me just move this whole thing away here, get it out of the way. There was a cup and ladle breakout formation. And that cup and ladle breakout formation says not only did it go to an E, it started a brand new buy mode. They went to an E, an F, and then a G. Very unusual G. That's that whole rogue wave thing. And now it's breaking down. But if in fact there could be a high-level consolidation, I don't want to draw another one in here. It's going to be, I'll do it, just to show what I'm talking about. If there's instead a high-level consolidation with no close underneath 1738.30, instead, there's a close this week, maybe underneath 1753 and holds at 1751, but then by Friday it suddenly closes back in to the 758 area. That's sideways move. It just says, hold on, the technicals might be negative, but I've still got internal strength and I am holding. But here's the other thing. Remember the pattern that I was looking at in the weekly? Do I hear music? Is that the speed of light? The speed of gold? The speed of the dollar? That's incredible. All right, it says that if gold can't use this squeeze between the stochastic and the MACD to power right into, I think 1820s, that's not a good sign. It's using up energy without the price movement. I'll be back. Basil Chapman, 877-927-6648. Love to hear from you.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com, where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and what you see right here is an introduction to the Rogue Wave, Chapter 11A out of slide 268 out of 476 slides, and this is very important. That explains how these things happen. There was a chart that I'll show in a moment on the E-minis where there was a single leg A up where it spiked once and then pulled back, and that pullback is like a letter A. It's what I call the Eiffel Tower. It goes straight up and then straight down. Well, rogue waves have very similar characteristics. A rogue wave analogy, sign at the beach says high tide at noon at 12:08. Oh, I said 12:06. 12:08, you're sitting at the water's edge reading a book and relaxing when splash. Suddenly you're soaked and wondering what happened. Well, the tide might have turned, but that wave didn't read the sign. So what does it mean? There's a chart on, I was going through EW. This is Edwards Life Sciences, which is down 20 at 87.03. So if you go to the low of the week of the 15th of March 2008, starts a peak A, B, C, it goes to a D, And then, because within 3 bars, that's another technique that I teach. It's called the instant restart. Let's see if I can find that here. Instant restart. That would be slide starting 293, chapter 13. So let's go to 293. And this is what you see, 293. There. Is that right? 293. Instant restart. So I'm going to go to it in a moment. I guess I put up the instant restart. Chapter 19. Chapter 19. There it is. The instant restart. Now, it's the only time it can happen is when you get to peak D. You will not find this in any other technique because it's something that I developed over decades. And I found that after the 4th peak, if certain characteristics happen, and within 3 bars, there's a higher price, you've got to have a parallel wave count. So from that peak D, it goes peak E/A, like it's a brand new buy mode, and an old one, F/B, then it goes to G/C, and it gives the signal that says, great, G is where it can pull back. The MACD and the stochastic turn around. But that instant restart says, hey, be careful, because if you get to a C, there is just a chance that at some point there could be a spiral to the upside to complete the D. That's how I came about this particular technique. Lo and behold, if you were short, you were absolutely correct in being short Edwards Life Sciences, going all the way into the 12th of September 2008. But then came that rogue wave. It's probably an announcement of something or other. Pow! It goes all the way above the high of 33.27, made on the 18th of July. It goes all the way to 33.49. Then the rule is, in the rogue wave, that you've got the bar that goes to the top and takes out the previous high says, oh, everybody that was short suddenly covers. All those that were long before and got out because they thought, oh, my God, this is terrible, get back in. And that very bar makes everybody look fools unless you held onto your shorts or you reshorted as it came back underneath the previous high, in this case 33.27. And look at this, kaplop, it goes all the way down in the next week or so, down to 22.38. Then it starts a brand new buy mode. Now, I haven't got time to actually, I've got this notated in my black background charts. What I wanted to show is the most recent buy signal with a doji candle on the 25th of November at 61.59, went to peak ABC, and then at D on the 4th of May, the week of the 4th of May, it pulled back for 2 bars and broke to a higher high, started what I would call an instant restart, ChapmanWave instant restart, went to a peak C, which could have been a G, right there on the 27th of July. But because there's an instant restart, you've got to say to yourself, unless the MACD crosses negatively and holds, I've got to have a little patience before I can do anything. What does it do? It goes to a higher high. That's what the requisite of the instant restart is. Goes to a higher high the week of the 14th of September, pulls back, and then it goes to another higher high, 120, 75, 79 last week. This week it opens. It goes to 108.41. And then news comes out maybe last night, this morning early, I don't know what it was, and plump. And look what happened. The stochastic was fading, the MACD was fading. So you got yourself, you got the monthly now in leg E. Almost certainly I can say that there's probably going to be a hat-trick top in Edwards Life Sciences tissue heart valves. In fact, a lot of heart problems going on right now for people probably who are still long. And look what happened in the daily. It went to that rogue wave E, just the same kind of pattern. The technicals were terrible. If you were short, you were right, but wrong on the actual price. But you were right in the basic trend, because it spiked to 106.94 on the 25th of July, came back down, made a doji candle with a turnaround of the stochastic and MACD at 96.36 on the 13th of August. Then it went where? Peak A, B, C, D, and E gives a sell signal at 109.88 on the 10th, makes a cup formation, has that obligatory retest of the highs when stocks have been absolute great winners. Institutions hate to get out of it. We saw that in Apple. I'll show you on the chart how it makes that extra little push to the upside, that cup formation. It's called in the ChapmanWave. It's called the ChapmanWave drop bucket formation, and the drop bucket formation is chapter 22. Here we go. And what does that look like? It looks like this. It looks just like this. There's the explanation, and it looks just like that. You make a double top. All it is a double top formation. It's like a backhoe in a bucket. It picks up all the gravel and dirt and everything, and then dumps it. And that's exactly what's happening now. So these are patterns that we see over and over. I actually looked at this, and it was on my list. Yesterday was an opportunity. I doubt very much whether I would have actually put on the short yesterday. I looked at other stocks that have actually been on the short side with slightly more convincing patterns. But this gave all the signs. And one of the reasons is in the cup formation, if it takes out more than a third to a half, and I was just waiting to see if it could get down into that low of 106.86. It went to 106.74. So today would have been the day I was really looking to see what happened. I had no idea it would do this. Completely missed this. It was a potential trade because it looked like the upside would be limited. I would never have expected this kind of gap down of 20 points, but it would have been one that said, you know what, you can put your risk to reward is really strong because all it has to do is go above 110.79 by 1 penny, and you're out. You say, that's it. So those are the techniques that I love to look at, and that's what you can follow if you have my book, Introducing the ChapmanWave Methodology. Now, let's go back to the market itself. What I'm looking for here, and this to me is really important, the TLT, the Lehman 20-year T-bond fund, and what I've done here is I've given a new representation of the ChapmanWave. And because this is an extended monthly chart with huge parameters, I'm saying that there is a chance. And that's the only reason why this morning I had it in my... I have to keep promising myself not to do this. I had written, buy the DXD, which we missed by fractions yesterday buying, buy today under 13,570, which was, is it 570? Yeah, 570, which 575. I was going to make it just a tad lower today because the risk reward was so biased towards the reward side. But there was a chance that we would have had 7 or more positions. I never have that. It's just too many and I blipped it out. I just took it out there. Instead, I said, we missed it yesterday by fractions. I said under 13,750, I think, or 570. And well, let me just see what I said. I said yesterday under 13,575, and it went to 13,575.35 or something. So we did not get the DXD. And there's another reason why I wasn't sure that I wanted to get that position today, and that's because going into this election cycle, why I'm expecting a lot of yo-yoing, there are just enough stocks that could have held the market a little higher, and I didn't see the potential I saw the potential in direction. I didn't see it in actual price of the DXD jumping, maybe in this case it's at 46.36, it was at 45, I don't remember what it was, 45, just not much lower than that. And I just didn't know whether or not there was enough in points to the downside. I didn't want to get into a position that I didn't feel comfortable with if the market was just going to have a high-level consolidation. This might be different. Now let me go back to what I'm looking at in the TLT, because for me it's really important. In the TLT, this is the Lehman 20-year, not the 30-year T-bond, but the TLT is the 20-year Treasury Bond Trust. It trades really well, considering that it's the 30-year that it's basically supposed to be looking at, but it isn't. It's a 20-year. So what happened was, back in, I should put the dates, back in June of 2009, it dropped down from 123 to 87.56. Then it went to peak A, and then it pulled back in that dreaded H pattern that I talk about. Dreaded H is chapter 17 in my Introducing the ChapmanWave Methodology. Then it went to a fractionally lower low at 87.30. That's 26 cents lower. In a monthly chart, in the 87s. Now, I'm usually really fussy about this, but I have to consider that because it's not the root, it is a derivative of a root, that there's a chance that that was the double bottom without breaking a low. Technically, it did technically break a low, but theoretically, and that was a peak A on August of 2009 at 100.31, and then instead of the new A starting in August of 2010 at 109.34, that's B. This is the pink B. And then we go to pink C, not B, at 125.03, which is above the previous lip on that huge cup formation back in October of 2009. And that we've actually made a D, not a C peak in the monthly. And that would coincide with what I'm looking at if I'm looking at the monthly of the continuous contract, that there is a chance with the stochastic pulling back still strong at 88% and the MACD still strong without the fast-moving average yet. The month has just barely begun. But it's holding the 9-period moving average, and that could be E and not C in the continuous contract. Remember, this is a difficult one because it gets smoothed out. So this is a continuous price, so they're always making an adjustment. So the price, I couldn't give you the price because I could say to you the price was 153 and 30 seconds. Another month I might look at it and that could be 129. So that's not the issue. It's the date is exact. So that says to me, I've got to watch, even though the Fed has said they're going to pump money into the bonds, they're going to keep bonds, they're going to keep yields low. That doesn't mean to say you couldn't have a pretty decent pullback here. So I'm going to watch this. And even now, look, the Dow's down 101. And the TLT, and they go back to the TLT, is it's down 0.01. That's not right. It's showing me that the weekly chart is really the most important chart right now. Why? Because on Friday afternoon at 4 o'clock, or any Friday afternoon at 4 o'clock, if the TLT starts to break and it closes underneath 119.30, it's under that up track channel line, and it says be careful because I want to test the 118.05 low of the week of September the 14th. Unless there is a powerful move in bonds. Now I'm going to go to bonds itself. This is the 30-year T-bond, US T-bond. Unless the daily chart and the TLT are able to snap through this resistance from the last peak. Look, see how chart patterns repeat over and over and over? Isn't this the EW chart that I just showed you? Isn't this I always get carried away here. Isn't this the, look at that little double top there in Apple? Isn't this the same chart that we were looking at? In many other areas. Let's go back to the USZ. And it says that the cup and the drop bucket pattern, this double top pattern, if it breaks more than 1/3 to a half of the previous lip high and low, could very well retest the low that was made in the cup. That would be 148 and 132nd on the December contract. If it takes it out, look for a potential double of the most important price movement, and that's that movement right there from 154.17 on the 25th of July to the low of 148 on the 29th, and that says be careful because you could very well have a double. I always take it from a double of that pattern, and that would take it down to where? That would take it down to 143, and it's trading at 148 and 12 seconds right now. I'll be back. 877-927-6648.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. So, TLT needs to spiral higher. It needs to get above 123.60s, I believe I told the subscribers today. It needs 123.50s. It needs to push above that to show that money's going to be coming out of bonds, at least for a little while, and going into stocks, or stocks coming out of stocks and going into bonds. And I suspect going to the high 123s, that'll happen. Volatility index, real quickly, and then I had a question in the den. I'm just waiting to clarify if KJS was wanting to know about NAT, natural gas, which I showed the chart of making this huge base, or if it was NAT, the stock. So in the meantime, the volatility index is showing some kind, I showed this the other day, the VIX index is up. $1.09 is 16.20. Now, every day I show my subscribers. Remember, I showed you that chart. It's too tiny. I don't know what happened here. All right, image, resize. See, too late. All right, I know what happened. I showed this the overview, and within that, I discussed the different things: the volatility index, the trend, etc. All right, North American transport. All right, I'll be right there. So what I'm looking at here is that in the volatility index, this is still kind of benign at 16.22. But if in the next 2 days the VIX index goes above 1650 to 1708, in this buy mode right now, is that a low new? No, it has to be 1351, 1367. That would be, if it goes above 1708, it's probably going to be leg C. There's a chance 1874 could be hit. If it suddenly fails by the end of the day and starts to slide under 16, and by tomorrow it's back in the 15s, once again, it's not telling us very much. Now, the question of the day, NAT. NAT is Nordic American Tankers. Nordic American Tankers is at 9.43. It's down 13 cents. Now, there was a chance, just a chance, that this was starting to make the kind of pattern that says, I might have had a horrible chart formation, but I think I'm about to make some kind of a bottom. And that bottom would only come in with a successful test of 926. If it didn't do it the other day and broke to a lower low, which it did, this is going to be leg F to the downside. 926 is the low on the 1st of August. I would wait. The entire series of testing 926, today's low is 942. If it does that and it holds, I'd say, okay, good for a bounce. But at this particular point, with the weekly plummeting and look at those red dots, that to me is just a negative. I'm holding off. The candle that was made in the monthly says the doji of round about 1176 will become a potential only when the weekly chart is able to close above last week's high of 1022 and then try to tackle the 1068 9-period exponential moving average. Until then, I don't think I'm going to touch this at all. And that's a pity, because if this starts to rally, that would be a good economic sense of what's going on. Now, quickly, as we're about to wrap up, high-grade copper started. There's a double top failure, C1, C2, another ChapmanWave technique. If copper takes out 3.68, watch out below. Let's go to EUR USD. That is the currency pair. Same thing. Try to rally. Right shoulder failure pattern. Holding the 200-period moving average. That's okay. The MACD is not good. Stochastics at 55 are not very strong. If the euro dollar takes out 1.280, that means that the dollar, remember the inverse relationship, could finally have a rally that takes it above 80.15. The index is at 79.98, and then that 80.47 will become a target. Folks, watch out. Dow 13,380s is really important, that area. And on the upside, the 13,560 to 590s is very important on the Dow. Volatility index pushes higher. We keep coming down. I don't like this market at all. I think it's going to have a lot of problems in the next week. Thanks for being here. I'll be back on Wednesday.